For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockeinyoursuccess.com/memberships.
So the first part of the question, do I use a concept similar to a daily loss limit or stop trading after X dollars have been lost? I think the concept is excellent. The intent, which is to say, if I'm trading poorly, I should stop and reassess things. That's excellent trader hygiene. That's a good habit to get into.
I think also, Stephen, too, while you're talking, part of your process should be an awareness of what you have on for trades and what the max loss is if your things go really bad, if all the trades go bad, basically.
Yeah, that's a great point. Because you could say get in your A+ trade, and again, it takes time to play out, and then within that there might be another setup that you're like, oh, okay, this is a good little setup. I might put on a Super Bowl for less DTE, and then you have 3 or 4 trades going, and all of a sudden you've got more max loss on than you're freely willing to accept over that month or whatever time period you're measuring. So, and I do like to do it on a monthly basis, how much I'm willing to lose that month. I think that keeps things pretty easy and straightforward.
With our trades, because they're usually longer term, right? So I agree with you there too.
Yeah. Rather than quarterly, when you start saying, what am I freely willing to lose quarterly? And it's like, oh, well, that gets a little bit unwieldy. So I think Michael's thought process is spot on with something that says, if I'm really trading crappy, I need something to hit the stop button and say, let me pull back. So for me, what I do is, instead of a dollar loss to identify if I'm trading out of process, is I will use number of stops. And it's going to typically be on a standard campaign. So let me just kind of define. So standard campaign for me is going to be some kind of M3-4U in the Russell. Right, standard size for me is a 10 lot. Willing to lose 2,500 up to 3,500. So if I take 2 full stops in a row, then I'm going to stop and pull back. Maybe for a few days or however long it takes me to, go through this process.
Because there can be a pretty good mental impact to that, right? So you might want to just pause just for that reason.
Just a pause. I might even take a day where that's a good point, John. I might take the next day, like let's say it's 2 stop outs in a row, full stop outs. Just, wow, what is going on here? That's very unusual. And I know, John, you used to have a rule of thumb. I'm jumping around a little bit here, so I apologize. That and it was more geared towards the rules-based. I can't remember if it was 2 or 3 stops. You said, okay, that's when you need to say, is something wrong with this strategy? And again, that's rules-based, really. And it's a really different animal, right, than it is sort of how you grade your subjective.
So. Right. And the fair part about that, too, is you can't tell just by 2 losses if there's something wrong with the strategy, because sometimes that just happens. Right. But you should probably at least say, okay, what is it about the market and what's going on that's causing these losses, and is that likely to continue? Yeah,
I think it was the rule of thumb was sort of 3. If you're having, a system, trading system, rules-based trades that we offered, you get 3 in a row, you should probably definitely hit the pause button. So in any case, for subjective trading, using your discretion, if I get 2 full stop outs in a row, I'm going to pause, and I might just take the next day off from trading. I might go do something fun. I might focus on my other endeavors, just kind of get off the desk to clear my head and get out, because after you've experienced any kind of trading, whether it's, because winning, as you know, John, can be just as detrimental.
It's equally impactful as losing, because then you get too much confidence, you get overexcited, you start thinking about, I can't lose, right? It's all that stuff.
Exactly. So you take a day to get some perspective. It's like we've talked about in the past in terms of looking at the charts and making a good read. It's funny how, say, after the holidays or some sort of, you've had time off from the charts and looking at them, and then you come back fresh, the grass is greener, so to speak, reds are redder. You just see things better. Whereas when you've been looking at it day after day after day after day, you can get kind of lost in the weeds. So it's just really good in general to do that. So I might take a day off. And this is part of my process is I'm going to do a deeper dive than I would normally do for a debrief, trade debrief. Just go day to day in the trade. What am I looking at? Look at my notes, my trade notes, and maybe I didn't make good trade notes. There's nothing worse than doing a trade debrief. And you're like, I have no idea why I did that idiotic adjustment. What was I seeing? What was I doing? Was there stress going on in my life? Did I panic that day? Did I just make a poor read? So, I really want to go deep with my debrief and my postmortem, and kind of answer this question of, during that particular trade, was it, operator error? And that could mean anything from, I just misread this and made a boneheaded maneuver. Or I didn't follow my plan. Could be as simple as that. That happens a lot. Or it's like what John was saying kind of earlier, or is it just a really hard market, difficult market? Like during COVID, it wasn't unusual to have two full stop outs. So that wasn't bad trading or operator error, so to speak. It was just, this market's really moving around a lot, and there's a lot of opportunity. So, you can get stopped out pretty quickly. So you have to be fair to yourself. We don't want to get into that thing where we're beating ourselves up. Like, oh man, that's 2 losses in a row. And, last quarter I had 2 losses and I do the same thing. You have to also take into account, what is going on in the market and where am I in my learning journey? We've got to have a lot more grace for ourselves early on in our learning journey. The trader journey in that process, to say, you're probably going to have more mistakes, more errors, more stops early on, and obviously less. So we don't want to just beat ourselves up as we're trying to learn, because we do learn the most from pain. We are going to learn the most from losses. We don't probably glean as much as we should from winners. So having said that, this is kind of a quick list. So, did I have a proper read on the market? Just like, for instance, if I'm looking at when I entered, it was a bullish setup and I put on a neutral trade. That's a poor application of my read.
Right.
Yeah. I mean, it's like, that's the kind of the number 2 here. Like, yeah, maybe I had a good read. It was bullish and I had it in my notes. Market is bullish, excellent setup, low risk, and you put on a freaking neutral trade. Well, that was an error.
Mm-hmm.
I want to check and make sure I'm marrying up what I'm seeing in the market with the structure. Did I use standard size? Did I use smaller size, larger size? We'll get to that question a little bit later, but you might call that operator error. You got a high probability trade, and instead of trading a 10 lot, you put on a 1 lot. It's like, oh, that's not maximizing my skills there. So that might be something I might want to look at. And then next, I would say, did I make a reasonable adjustments during the campaign based on my pre-planned market expectations? Now, I wanted to put that in there because it gets tricky as discretionary traders as new information comes into the marketplace. Market generated information during the campaign. Yes, our expectations can change or be altered from our previous expectations, but you have to maintain a healthy balance between those, right? You can't say, I'm really bullish here. If we're going to bounce up to this point, and if we close above this swing point, that puts in a U pattern, and I've got my price pattern target, and then all of a sudden during the campaign, I completely ignore all that. You have to kind of marry the two things together. You need to make sure that you're keeping your pre-planned market expectations in context, but also using the new information appropriately as well. You're not abandoning one for the other.
Right.
And then also, here's something that I've caught myself doing or discovered during a trade debrief, is the trade structure and the trade design doing what it's supposed to do? In other words, am I expecting more out of this particular trade structure than it's capable of doing? And let me give you an example. If I'm sort of, say, neutral to bullish, then I might put on a bullish leaning M3-4U. Makes sense, right? But then the market starts to run away from that structure. What I don't want to do is start trying to make money to the upside, because you're just not going to make much anyway. So stay with me here a second. If I start chasing the market up by aggressively condor rolling up or aggressively rolling the upper long down to try to make, quote unquote, make some money to the upside, because now the market's kind of taken off, or maybe it's gone up farther than my control point or my expectations. Now I'm trading out of trade design. And what happens if the market pulls back? I mean, a number of terrible things. One, I've got tons of downside risk probably. Two, I just squatted the top of my tent much lower than it was before. And if it does come back in the tent, I'm scrambling to try to open that thing back up, which I probably can't do in a very responsible manner. So I've taken the opportunity away from myself. And you're much better off in that situation. And then, John, let me know if that makes sense, because I know that's kind of theater of the mind there. Is you need to just, either get out of that trade and put something else on, or let that trade kind of play out and see if you get a pullback into the tent, but give it an opportunity, and don't just try to move your opportunity from the tent, the condor or the butterfly, and try to put it up out in front of the trade and make, a few pennies.
Yeah. So Stephen, just a thought on this, right? So like an M3.4U, like if you look at the rule set and you trade it, then you get in a situation where you enter the trade and there's some upside risk, and you enter the market and you get a 70-point move in the Russell the first day, and you never shift. The delta doesn't shift very negative, or maybe it shifts a little negative and you correct it. And I'm now I'm set up so I can lose $500 to the upside, and the market just keeps going. That trade is by design designed to lose money in that situation. Trying to force it to win is what Stephen is saying is outside of trade design. You're like, what do you mean it's designed to lose under that? All your trades are designed to win under certain scenarios and lose under certain scenarios. You just don't know it because a lot of people make their rules based on back testing and fine-tuning them until they win, rather than understanding the trade itself. But an M3.4U is designed to lose under that circumstance. So trying to force it to win, you're doing something else, something outside guidelines. Trying to force it to break even, you're doing something outside guidelines. You can leave it, you can exit it, you can put something else on, you can do whatever you want, but that's the trade design, so that's what you get, right? I think that's what you're saying, isn't it?
That's spot on. That was really well articulated. And that goes back to, the purpose of learning the rules is to understand the purpose of the trade and what it's designed, like John just said, what it's really designed to do. It's designed to make a lot of money if it stays near the tent, not designed to make, and John, you put it a little bit more clearer. It's designed to lose to the upside. And we're over here trying to, I need to at least break even, and putting yourself at so much more risk when, you need to scrap it, move on, and not try to force things. But yeah, that's exactly it. That's exactly it. And you can find yourself in that situation. For me, and I think of a lot of us, it's that competitiveness comes out in us, and you're like, I don't want to lose in this trade. I could bring it from down 700 to back to break even if I do.
But realistically, it's not even about that trade,
right?
If you're making it about that trade, you've already lost. It's like that trade was on, that trade lost. What's the opportunity now? Right. This is where you need to be,
and that's where you can uncover some of this stuff during that trade debrief. Right? Those are the kind of questions I want to ask myself. Was like, what are you even doing? And so it can really bite you, because you can have a situation, like I said before, the market does make this move up, hits resistance and then naturally retraces
and then
the
you
move
force
and
it.
comes back. Yeah.
Right. And then you force it, and now you're taking on more risk than the trade was designed to take on.
Right. Now you're scrambling. Now you're stressing. You've put in all this work. And now you're really looking at missed opportunity, because then you're doing, how many times have we all done this? Had I not adjusted it, it would have been
Right.
twice as much. Not 10% more, but I mean, it's the multiples of how much more opportunity is stark. And that's why understanding the purpose of your trade, what's designed to do, what it's just, and like John pointed out so well, what it's designed not to do is just as important. And so I want to be checking that.
Right.
And then lastly on here, I want to make sure, ask myself, was I revenge trading or trying to get back prior losses? And that really speaks to what we just talked about, because you can do a form of revenge trading in the middle of a campaign. Like, oh, this isn't the market's not doing what I want, and it's taking off. Well, I'll show you. I can, still pull out $500, or I'll make a little bit of money. All in the meantime, I'm taking on an enormous amount of risk, sinking my risk reward ratio. If the market moves back, now I'm trying to make 500, but I potentially could lose 7,500. I mean, you're
Right.
just completely upside down. And to me, for this style of trading, that's trading on tilt. You're kind of revenge trading. You're taking on just inappropriate risk.
Right. I'm
You're
trying to get my
becoming
trade back to
emotional.
break even, and I'm going to do whatever I
Yeah.
can to do that. And I'm not looking at what the opportunity is. I'm not looking at what the risk is. I'm just trying to get back to break even. That's trading on
Yeah.
tilt.
That's trading on tilt. That's revenge trading, emotional.